Ever wondered how illegal money gets cleaned? Welcome to the secretive world of money laundering. It's a complex global issue, with tendrils reaching far beyond the realm of the rich and powerful. So what is money laundering? In its simplest form, it's the process of making dirty money, earned from illicit activities, appear clean and legitimate. It's a clandestine dance that masks the true origin of these ill-gotten gains, making them seem as though they've been earned through honest legal means. And it's not just an issue for the high-flying criminals or corrupt officials, it affects everyday people too, destabilizing economies, funding organized crime, and eroding trust in financial institutions. That's right, money laundering has a ripple effect that can touch each and every one of us. So how does this shadowy process work? Buckle up as we dive into the steps of money laundering. Money laundering is a three-step dance: placement, layering, and integration. Let's kick off with the first step, placement. This is the initial stage where the dirty money is introduced into the financial system. It's like the first beat of a dance, setting the rhythm for what's to come. The illicit funds might be deposited into a bank account, used to purchase assets, or even gambled. The key here is to get the money into the system without raising any red flags. It's a risky step for the launderer because large cash deposits can trigger suspicion. Moving on to the second step, layering. It's the most complex part of the dance. The goal here is to obfuscate the origin of the funds, making it difficult for authorities to trace the money back to its illicit source. Imagine it as a complex choreography of numerous transactions, transfers, purchases, and sales. The launderer might bounce the money through various bank accounts across different countries and in and out of numerous businesses. It's a whirl of activity intended to confuse and misdirect. Now, onto the final step, integration. This is the grand finale of the dance where the clean money is returned to the launderer. At this point, the money has been so thoroughly mixed with legal funds and distanced from its original source that it appears legitimate. The launderer can now use it freely without fear of it being traced back to any criminal activity. They might invest it in real estate, luxury goods, or legitimate businesses. It's the final bow of the performance, where the dirty money takes its exit, leaving behind a stage of clean cash. So there you have it, the three-step dance of money laundering: placement, layering, and integration. Each step is a carefully choreographed move designed to make the illicit appear legitimate, the dirty appear clean. But remember, while it may sound like a well-rehearsed performance, it's a dance that's illegal and can have serious consequences. Now that we understand the steps, let's delve into how to detect these activities. Money laundering may seem like a perfect crime, but it leaves traces if you know where to look. So what are these traces? Let's talk about the common signs that might hint at money laundering. First off, unusually large transactions. If a regular Joe suddenly starts shifting millions, you bet that's a red flag. These transactions are often broken down into smaller, less suspicious amounts. But even then, the frequency and volume of these transactions can raise eyebrows. Secondly, frequent overseas transactions. Now, we're not saying that everyone who sends money abroad is a criminal, but when money frequently flies across borders, especially to or from countries known for high levels of corruption or criminal activity, it's worth taking a closer look. Next, transactions that don't match a customer's profile. If a student starts buying luxury yachts or a retiree suddenly invests in a tech startup, something's fishy. People usually stick to their spending habits and patterns, and deviations from these can be a sign of illicit activities. Financial institutions play a huge role in detecting these signs. Banks, credit unions, insurance companies. They all have systems in place to monitor transactions and flag suspicious activity. These systems are crucial in the fight against money laundering, helping to protect not just the institutions themselves, but their customers and the wider economy too. Spotting the signs is one thing, but what should you do if you suspect money laundering? If you stumble upon a potential case of money laundering, you have a responsibility to report it. Now, how do you go about doing that? Well, it's crucial you contact the appropriate authorities and not take matters into your own hands. In the United States, for instance, you'd report suspicions to the Financial Crimes Enforcement Network, or FinCEN. If you're in the United Kingdom, the National Crime Agency is your go-to. Now, these agencies differ from country to country, so you might want to do a quick search to find out the relevant authority in your area. Remember, your role is to report, not to investigate. Don't ever try to alert the suspect or intervene directly. You could potentially endanger yourself or compromise the investigation. So step up, play your part, make that report. You could be instrumental in breaking down a money laundering operation. But why is it so vital to stop this crime? Let's explore the dangers of money laundering. Money laundering isn't just about illegal money becoming clean. Its impact is much more destructive. This insidious process can have devastating effects on society and the economy. When money is laundered, it often winds up funding criminal activities, from drug trafficking and organized crime to terrorism. These illicit activities can wreak havoc on communities, causing widespread harm and suffering. But the damage doesn't stop there. Money laundering can also destabilize economies. Imagine a world where the value of money is arbitrarily manipulated by criminals. It distorts market realities, fuels inflation, and can even lead to economic crises. Now let's talk about the law. Governments around the globe have enacted stringent laws to combat money laundering. In the United States, for example, the Bank Secrecy Act and the USA Patriot Act provide the framework for identifying, preventing, and punishing this crime. Violating these laws can result in severe penalties, including hefty fines and lengthy prison sentences. Internationally, the Financial Action Task Force sets standards and promotes effective implementation of legal, regulatory, and operational measures for combating money laundering. They conduct peer reviews of each member on an ongoing basis to ensure compliance. Remember, money laundering is a crime that affects us all. Stay vigilant and report any suspicious activities. Together, we can fight this menace.